G'day, mate. Let's go. Coffee's not good today. Wow. Hey, let me remind you that trading's risky, not appropriate for everyone. Beat us for Sonny Bono. Beat us for Yoko Ono. Trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But please stay small, stay humble, focus on the long term, and chicken, never risk money you cannot afford to lose. Hey, my name is Wayne. Nice to meet you. I'm the Chief FX Market Strategist for TradersWay.com. Thank you very much for being a client to Traders Way. We love you, we appreciate you, and that's why we sponsor the Forex.Today YouTube channel, to make sure that you have training and support in your life every single day, day after day after day, week after week after week, month after month after month, year after year after year, so that you can hone your skills. And yeah, sure, technical and fundamental analysis, but the big skills too, like learning patience, discipline, and, you know, strategic vision for your Forex trading business, right? To get you out of the amateur mindset into the professional atmosphere. So anyways, thank you very much for being a client. If these webinars are important to you, please not only subscribe, but every single day, leave comments, please. And if you don't have time, just at least a thumbs up, dude. Would you do that, please? That would be greatly appreciated, because it tells YouTube, right? You're not telling me. You're telling YouTube, hey, this is quality content, and this should be made available. Sound good? So make sure you visit TradersWay.com, open an account, start with the demo, download MT4, check out the execution speed, check out the spreads, and then check out the amazing swap. And if you don't want to pay spreads, you can also have an ECN account. So whatever you want. Cool. Right, so boom. I was reading through the comments yesterday. Some of you guys were pretty harsh on me about, like, what the hell do you mean the yen is weak? And what the heck are you doing selling the pound? The pound is not weak. You are totally wrong. I'm like, whoa, 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 whoa. That's not what I said. What I said is 6, 7, 8, 9 months ago, I planned in this period to look for the yen pairs to fall. It's just a plan. It doesn't mean it will. Now, on the first day of that 2-week period in which I said I would start to look for the yen pairs to fall, some of the yen pairs set up at amazing, ridiculous resistance. So I took a shot. You understand? Like, it's not that I'm saying it's bearish. It's just a trade setup based on a plan that I've built. And I understand it's based on fundamental analysis and seasonality. So it's not in the charts yet, but I am preparing for that, and I am building a portfolio. I'm not in the trade for a day. If the trades I made on Monday, I plan on either getting knocked out of break even or being short for 5 weeks. So there's going to be some wiggle room. I'm going to have to make multiple entries and try to catch them and stuff like that. But I just want to, what I'm trying to show you with this is that I'm preparing not even just hours and days in advance, now weeks and months in advance, right? Now we have this period of, will the portfolio present itself? I don't know what the future is, right? I don't know the future. And I understand there's some risks associated with wanting to buy yens now. Now, keep in mind, I've been selling yens for months. So all of a sudden, in a period in which I said I would exit, I exited those trades. 300 pips each. Cool, not bad, not great, not the best year, but hey, if you got 10, 20 trades, you're going to be fine, right? So now I'm just preparing for the next phase. That doesn't come down to a day. This might take me 2 or 3 weeks to get this going if it works, or December is a bunch of break-even trades. Well, that's okay by me. Okay? That's all. So you got to take it out of, these are just entries into a designed portfolio, and I need to slowly go into these trades because the market was not bearish. You are correct. And I think it was Max and I think Morena made comments, and I'm like, look. I'm just tiptoeing into the waters. That's all it is. It's not me saying that is bearish. No. What I'm saying is in the next 2 weeks, I think it might become bearish. Okay? Big difference. We're not talking about a trade per se. I'm talking about a change in market conditions, which if you, and I think I did this yesterday, I talked about it, where it takes a long time. If I'm right, it takes a long time for the rest of the market participants to see it and then agree with it, right? So I got to go, right? I got to go slow. That's all. So I'm not saying it is bearish. I'm saying I think it will become bearish soon. Therefore, I don't want to be bullish anymore. That's the first thing. Doesn't mean it's bearish. I mean, it just took profit. Right? I just took profit. Great. Now what? Now I took profit because I believe the market conditions are changing. So now I'm going to look for those changing market conditions to enter a new strategy. That's all. Greg says, in 1 month, it'll be 5-year anniversary for me doing these webinars through Trader's Way. Cool. And I think it's 15 years for FX Bootcamp. Something like that. Actually, it's more than that, isn't it? 16 years. I think 2004 is when I started sharing. So, like, if you go back 16 years ago, I was going through a bad period in my trading. And remember, I was just promoted vice president of the venture capital firm, overseeing hundreds and hundreds and hundreds of people. I was super happy, but then I quit to become a Forex trader. Cool. So I made a pretty big leap of faith, right? And then I go through this this bad period of trading. And it's devastating to me. Like, I gave up almost everything to become a Forex trader. And all of a sudden, I'm not doing well, right? So I step back and I say, well, I've been successful in many other things in my life. I've managed thousands of people. I've been in, big with big players, newspapers and magazines around the world had interviewed me all before Forex, right? So I'm like, so I get to Forex and I'm not getting the results I wanted. I'm like, oh my God, why am I failing? I'm not used to failure. So I said, well, what did I do in the past that made me successful? And that was part of my business planning retreat, right? And I'm sitting there, and one of the first things is like, every time I was successful in the past, I had always been surrounded by like-minded people. Successful, driven, like-minded people. About 16 years ago, that would have happened. At the Ritz-Carlton in Half Moon Bay, California. So anyways, out of that business planning retreat, I said, I need to create a community. And that's what I did. I said, I need to surround myself with other like-minded people. But I had this problem. I'm like, I don't know any other Forex traders. I don't know anybody that's even heard of Forex. And that was the truth. And when I met with, so like last night I hung out with a bunch of wealth managers, right? 16, 17 years ago, about the same time of year actually, I was at a holiday party with a bunch of wealth managers. And they laughed at me in my face. A, I'm a Forex trader, and they thought it was pathetic. And then B, I used technical analysis. They thought I was a joke. And these were people that were supposed to care about me, right? So anyways, so I'm like, how am I going to get, I don't know anybody. How am I going to get people to hang out with me? Like-minded people interested in Forex, working day and night. I mean, literally day and night. How am I going to do that? And I said, I'll use this webinar software. And that's how it started. Okay? So, boom. And that was, if you think about it, that was like 4 years before YouTube was invented. So anyways, thank you for being here all these years. I've known some of you guys for almost all of that. Okay? So anyways, thank you for being in my life for all those years. All right, let's move on. Let's burn through some charts. Let me just go. I'm just gonna go. You ready? 3, 2, 1. Where are we? Let's start here. Kiwi Swissy. Currently, the trend is up. Okay, but what are we looking at here? We're looking at that's a monthly R at the top of the channel. We know when you hit 2 standard deviations from the mean that there is likelihood that you return back to the mean. So even though this is an uptrend, if you were going to counter trend this because you wanted the Swiss franc to gain strength, you'd be trading this. Okay? So there's definitely plausibility here for you if you are a bear. If you're a bull, this is what you got here, and then a front run. Okay? Cool. So you're almost playing this like a double top as a bear. You're going to be challenged right about here. And you'll notice right where you get challenged is where bulls are supposed to buy it back. They might wait till Friday. They might wait till Monday. But that's where that is. Next. Pound yen. Pound yen. This is 4 hour. Let me click into the hourly chart. Okay. When we're looking at pound yen, what I see here is the monthly target. So all bulls are supposed to be taking profit. And then I also see the weekly profit target for bulls. And therefore, I sold here as a counter trend trade. Okay. And we'll see. I know it's high risk. I'll probably get knocked out at break even maybe Friday or Monday or something. And then what I'll end up looking for is a second chance. I'll probably exit this for nothing and re-enter this for something. And there, you might say, well, what if you think it might continue down? Why would you exit now? Well, I don't want to lose any money. So if I'm wrong on the entry here, that's fine. I don't want to put my stop up there and suddenly lose 100 pips just because I thought I was right. Dude, if it drops and comes all 100% retracement, I don't want to be around. If it drops, gives 100% retracement, I get knocked out of break even and then starts to fall again, I'll just sell again. But I don't want to risk money, okay, over pride. Okay? But if you see what I did here, okay? So just trading that, just right below 143, right below the monthly, and right in there. So whatever. It's a small confluence. It's like one of those situations where, hey, and that's it, praying never hurts. Okay? Praying never hurts. This is CAD Yen. So we have an OPEC meeting coming up. Oil did 100% reversal, okay? Which means CAD is going to be strong. Okay? Doesn't necessarily mean yen is weak. It might be, but more than that, this has to do with oil. So we'll take a look at oil. Also, you'll see, it's amazing how, like, maybe this is the OPEC meeting, which I think actually starts today, doesn't it? But anyways, it's always amazing how these things happen at the exact price. Okay, so anyways, we'll see what happens there. But I think a lot of this is oil. Also, you'll know that we had a Bank of England or Bank of Canada meeting the other day, and they're just sort of like, things are not as bad as some people were worried about, but some people worry about everything, right? Okay. Next. Let's go over here. So here's that WTI I told you about. This is now related to the OPEC meeting. And that's funny. That's the same analysis of the CAD, but okay. So weekly M2. So this is a weekly buy. And this is a monthly buy. Oops, monthly buy. Okay. And now we've hit the first target, which is the weekly M4. So we've gone from down to up, and right now I would still be neutral. I I would think of it this way. I don't know if I'd trade it this way, but I'd think of it this way. Let it break out before I really get involved one way or the other. Okay, but that was a nice little snap there, right? Again, yesterday we talked about oil inventories and that OPEC plus their friends, aka Russia, would probably start to look to cut, right? We talked about that yesterday, didn't I? And I showed how if they cut, how supply will shift to the left and that prices would go up. It's amazing that an hour later, prices went up. Well, you're welcome. Okay. Delete. Next. On this one, I think we were neutral here. This is where bears would sell, so as a bull, you cannot buy it there. And if you were a bull, that's where you're supposed to buy, and no bear could sell it there. And I think if I were me, I would believe that this medium-term trend is still prevailing. So even if I'm a bull, I got to be aware of that there's still a pretty big chance that this drops and heads down to the next level. If you remember, we looked at a confluence of this low with this low, somewhere around the M1, maybe come down and tickle the 1400. Now, a bull could also afford, I think, to wait for a breakout and then grab the pullback. If you think we're going back in this direction, which is a valid thought process, perfectly valid thought process, it's the timing of when. Does it come down and then go up, or does it go up now? So it could always go up now, but if I were me, I think if I were designing the perfect trade, I'd rather it come down here before it goes up. But it's not up to me, is it? So if it does that, let it break out, catch the pullback, long and gone, done. Okay? That would mean a weak dollar. That would mean positive global macroeconomics. Okay? And let's go to euro dollar. By the way, am I going too fast? Okay, check this out. We had this a few weeks ago, I think it was. We had this as a down, 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 up, up, sell. Let me change the color because that's hard to see. We had this as a down, 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 up, up, sell off of the take profit zone, right? If you recall. That was our plan. And we were only right for a week. Then we hit the first level of support and we hit the monthly M2. Bulls got back in, took the ball back. Now we're kind of back to where we were. So obviously I would treat this more neutral and more bullish now than it may have been before, simply because we're looking at a pattern here. Like bulls did what they were supposed to. That is a double bottom all day, every day. This is a monthly M2 all day, every day. This was a weekly M2 all day, every day. Okay, so a bull has every permission now to buy the dip and take it north. And for that, you need positive global macroeconomics, aka a weak dollar. Okay? Actually, currency trader, yes, I had a lot of sleep. So I went out to this dinner with these wealth managers. It's a small team. I think they have like 300 million or something. And so we had our wine and had a steak and all that kind of stuff. We had our nice chit chat. And they're like, we should get together and do golfing. We should get together and smoke cigars. I'm like, hey, you bring the Pappy Van Winkle, I'll bring the Monte Cristos. And they're like, yeah, let's do it. I'm like, great. And I went to bed. I went home and then went to bed. Like I think I was asleep at 10. So yeah, but no coffee yet. In fact, this is my coffee. Full. But I've had 500 milligrams of caffeine. That's true. I had Rockstar Extreme, and then I had a Rockstar Regular. So I guess that counts. Pro Trader says, positive macro, why isn't it strong? You don't understand the US dollar. Okay? That's all. I've explained it 100 times. I won't do it today, and I want to move, right? I've talked about it a lot. When the US dollar, being a reserve currency, is weak, global macroeconomics is strong. Yeah, Max, you were a little pissed off at me yesterday. At least that's how I read it. I'm like, is this Maxie? So anyway, so yeah, way less cranky. Yeah. Well, then I appreciate that, if I pushed and you pushed back, then that's fair. Fair game. Okay. Tom says, how much did you pay for the 777 deal? 777? All right, so we did that. Let's burn through something else. I'm looking to set up the Swiss francs again. Okay, right on, Max. La 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 la. You just got to remember, Max, I'm an only child, so I need you to love and adore me. And I love the spotlight, and I love the attention, and I love the love. But then you say one negative thing, and I sit in the corner and I cry and I pout. I'm like, nobody loves me. Everybody's mean, right? So anyways, just keep that in mind. I want you to want me. All right. So anyways, here we are. And mediocrity. So right? I was, right? Should I be looking at this? Yeah. Oh, hey, by the way, whoa, I almost forgot. It's Thursday. We have the swing trading group today at 11 New York time. If you're in my swing trading group, and several of you took the secret deal, the 777 deal, the 52% off deal, and then you got the super secret bonus that saves you in hundreds of dollars more, I think $400 more. So all you guys that took the super secret deal inside the super secret deal, then I will see you at 11. Cool. Yeah, the future. Yeah, it's good to be self-aware. Yeah, I did something really ridiculous many years ago. I charted my emotional intelligence, and I went back to my first memory, and I worked on it for weeks until I got my earliest memories, like baby memories. But you still have them inside your brain. And what happens is you think back, like here's an exercise, like what is the first home you remember living in? And where was your room? Where was your parents' room? Where was the bathroom? What was the kitchen like? What was the building like? And you actually, like your memories, you're like, oh, you open that door. And where was the closet? Oh, there's a closet. And you go and you start finding these memories. So anyways, I charted my entire emotional intelligence, going back to the earliest memory I could possibly find after weeks of meditation. And I would ask myself year by year, was this a good year? Was this a bad year? Like just whatever that meant. Do I remember it being good or bad or neutral, right? And then I would grade it. And then I said, well, a 2-year-old memory can't be the same as a 20-year-old memory. I could have a horrible year when I'm 20 and 2, Santa Claus could die and I wouldn't know, right? So anyways, so I said, well, so I did some math. I'm like, the older I get, the more emotional intelligence I would have and all this kind of stuff. So, and then I plotted this all on a chart. Okay. And then once I had graphed out my entire emotional intelligence from the beginning of my life to where I currently stood, then I explained the exercise to my mother, and I had my mother, without her seeing my results, I had her think about my entire life from birth, year over year, and have her grade how she interpreted or thought my life was then. So like maybe when she went through her divorces, she might have thought I had a horrible year, and yet in my result, it wasn't a big impact at all, right? That kind of stuff. And then after she did that, then I took them, put them together, and overlapped them to see the convergence and divergence of our charts, right? And then tried to change the way that I manage my relationship with my mother so that I could be a better son. Yeah, it did that. So when it comes out to like awareness and stuff, yeah, I can joke about these things like being an only child and needing to be showered with attention and adornment. But I've gone through that closet and kicked out the skeletons, and I know it to be true, and I'm not ashamed of it. In fact, people are always shocked how honest I am when I tell people that, and they're like, "Oh my God." So there you go. Amazing, though, right? That should be in a book. Anyways, yeah. Doesn't look great, but it looks like maybe a second chance. I don't know. I'm still sort of looking at this as maybe somewhat neutral. Yeah, oh, the future says, yeah. Yeah. But, it's a hard thing, though, on the future, or the future. Honestly, it was a very difficult thing. There's a reason why people forget memories. You have the memory in you. It's in your brain. It's in your soul, right? You have it. And there's good reason to temporarily, and by temporary, it could be the rest of your life, just forget these things. So it's a little scary to go through your life opening up some of these boxes or these doors or these closets because those ghosts you locked away on purpose. So it's not an easy thing to do, actually. It's actually pretty hard and pretty scary. Yeah. Yeah. But I did it. For good or for better or for worse, I did it. Cool. So, on the long run, what should we be doing here? Well, we can measure this in many different ways, different time frames. Okay, how do you want to play it? See, I look at it and basically can be both. We're not playing the monthlies very well. This is not a bullish monthly pivot and stuff, so I don't know. But I'm looking for Swiss franc strength. CAD is strong today, so yeah, I might sell it tomorrow or something. We'll see what happens to CAD. Okay, I'm open-minded, but I'm trying not to be stupid. Oh, what is this? Weird. That was weird. Oh, that thing. All right. So that's that. Pickety pound, kind of the same. Don't want to cover it because it's, well, I mean, it's too late as a bull. You can see I already designed the support for you guys. So you either bought it or you didn't. Looking at it, this Kiwi, this is a little more interesting. Okay. Because the weekly swing says this might be the bottom. If that's the bottom, then this is the top. And in fact, if you've done the swing trading course, you will know that if you bought here, it's predicting that this R2 is the top. And it was the top. Okay. Okay, so now, oh, cash, we can take a look. Hang on. Okay. So as a bear, I think that's what I'm going to look for. A challenge of the 21, even a breach would be even better, and take a shot. Cash wants to see the money. Cash money. So let's say break even, break even, break even, profit. And then this CAD I tried to catch. I had to use a limit order for it. Let me go back through that CAD. So I'm losing 50 pips on that. But let me show you what I did. And it was kind of interesting. So I got caught, obviously, on the wrong side of that CAD news. The central bank news, as well as a move on oil. But this isn't it. This isn't it. Well, you know what? Let me just change this template. I'll show you what I did, and we can talk about it. Boom. I think this will show it. Okay. That's not as good. Let me change it. I liked it this other way. There we go. All right, so let's take a look at this. What did I try to do? If you recall, I sold a bunch of yen pairs at this time, and for whatever reason, I missed the entry. So think of that. All right, think of that. Okay, at this point, I sold like, what was it, 4 or 5 yen pairs, and they were all profitable. But I was not on CAD Yen, and I'm like, gold, dang it. And not only is this a top, right, but you have to put this into perspective. This is the weekly sell pivot. This is the monthly sell pivot. And, you know, we got the top there, and I took 3 or 4 other yen trades to the south side, and they were all profitable, but I was not in this one, and I'm looking at it, I'm like, oh, dang it, that was a great sell trade, but, like, I'd even forgot, like, why didn't I sell that one? And, you know, maybe I forgot about the central bank meeting or something, but I wasn't on that one, but I was on all the other ones, and they were profitable, and then I looked at this one, I'm like, why was I not in this one? And we were down here. And you have to understand, I do not chase price. I don't chase price. So I should be short up here. And by the time I realized I missed it, price was down here. And so I had to look at like what would be the valid rules of engagement for me trying to sell this. Okay. Why can't I get temps for $1 link? What? Someone else emailed me and they're like, they had a problem. Like, so many people don't have problems, but some people have a problem. So I'm trying to figure that out, Max. So Max, can you email me, wayne@fxbootcamp.com? Show me the screen that is giving you a problem, and also let me know what web browser you're using. And if you're on a Mac, let me know that as well, okay? Okay. Hey, is Ludix spamming us? So anyways, so that was my mental state at the time. And the decision I made, let's see, I think it was when we were still down here. I looked at the weekly sell zone, and I looked at the nearest selling monthly pivot. Okay. And I made this part my more aggressive entry. Okay. And this one moved fast and caught me a little bit, but yet it's less than 50 pips, so I'm not that afraid of it. The next part here is this is also a potential sell. I just don't like the fact that it's a higher high. But so when we were here, I said, yeah, if it pulls back to this level, I'll take a shot. And typically, you don't get a reverse that fast, right? So that was definitely a fundamental move, right? Yeah, why don't I sell and that's a good point, Cash, and I basically was saying that. I don't know if there's a lag. This is a valid sell for me. It is. I'm worried about it because it's a higher high. Not much. Like, let me try to get this a little more official. So I'll draw it this way, okay? And I'll draw it this way. Okay, both I can see a slope, right? Rise over run, right? Y equals mx times b, or mx plus b. And you'll see that it's higher high. And I don't really like selling higher highs. So I guess Cash, what I can do is, what I can do is wait for maybe something like this. Okay. Does that make sense? So this didn't turn out well for me. So this is an example of, trying your best and not doing well. It took a lot of patience to wait for it to come back. And none of the other yen pairs have snapped back that much. So a little unlucky, I suppose. If it goes any higher than this, I'm going to bail for a loss. DJ says, don't stack trades until you're profitable. Yes, sort of. Like not 100%. Okay. But I'm not, let's put it this way, DJ. I'm not going to stack another short until I get bearish market conditions. Right? So the way I'm looking at this is it's not bearish. I want it to be bearish, but this is not bearish. So I can't really add another one until I get the bearish conditions. Right now, the bulls have a slight advantage, and I have to recognize that. Now, if other bears are going to jump in and defend this monthly M3, then that's cool. I just don't need to be part of it. Okay? And if they defend it, then I'll feel better. So I might sell it again before this one's profitable, but I may not. I don't have to. And if it goes higher than this, I'm going to bail for a loss. No big deal. Can't cry over 50 pips, right? I'm going crazy. Did I get that? No, I did not. Or I could take the loss now, but this is resistance. So why, as a bear, like why? Because see, if I get out now, I'm basically buying, right? So why would I buy it at resistance? If it goes above resistance, I'll get out. Because if I'm short here to exit the trade, my broker, right, Trader's Way, is going to put in a long position to offset me. So it's the same as me saying, oh, this is a good place to buy. No, this is a terrible place to buy. Why? Because it has a good chance of coming down. Oh, well, I'm a bear and I'm already in it, so I might as well just let it happen. Oh, why is 50 pips nothing? Because my leverage is so low. Remember, if 50 pips is a lot of money to you, you're over leveraged. Okay. Jimbo says pivots are failing this week. Volatility here. Yeah, well, let's think about this. Let's think about it. Let's just say I'm right, okay, about market conditions changing from bullish to bearish, okay? Let's just pretend, because we don't know. And I explained yesterday that it could take a couple of weeks for other market participants to figure it out, where it slowly goes from very, very bullish to very, very bearish, right? So imagine this now, that would create the volatility, wouldn't it? The first volatility that we saw on Monday was people like me taking profit. I took profit on Monday. And the market crashed. I wasn't the only one. Then we have this rally. Well, that just might be bulls saying, oh my God, it dropped. Well, it did that in other months and I bought the dips. But this month I didn't because that was part of my plan. So I still don't know if this market's going to go bearish, but I got out of being a bull. The market dropped, so I know I wasn't the only one. And then the market rallied, which means there's still some people that are doing what they did last month or the month before. And in fact, it might actually be people that didn't buy in August, didn't buy in September, missed October, got a little bit in November, and now they're once again late to the game. Okay, cool. So we get this big rally. Not unheard of. Doesn't bother me at all. It just says I need to be careful as I tiptoe in. Okay? But if I'm right, over the course of time, you will get this seesaw of, right, more bulls getting out, the market drops, less bulls buying back in, and then it rises, and then old bulls becoming bears, and and you get this tug of war where bulls are winning, and 2 weeks later, bears are winning. So you're going in this period of time of discovery, if you will. Market participants are going to get chopped. This is why I said, like, it might be a good time to like just totally get out of your entire portfolio, right? Right? Totally get out of the entire yen long or yen pair long portfolio, which I prepared for. You knew this was happening. This is not new news. This is not a surprise, right? That's why you might as well just, take your money and run, and you just skip that whole volatility nonsense, right? And in my plan, which again, I don't know if is correct, but my plan, my strategy is that by the first week of January, all these yen pairs are going to be crashing. Okay? Benjamin, start with the basic training program and then start with the taking control program. Okay, that's the oldest and the newest. Okay. So anyways, hopefully all that was helpful, guys. So but going back to Jimbo's point, it's supposed to be volatile right now because of the market discovery. Okay? And to cash, you know what I might do, cash? I might let this come up to 83 and then take a shot this way. But we'll see. I'm going crazy. This is Wayne. How can gold act as safe haven and be anti-dollar? It's not. What safe haven? What does that mean? Well, usually to most people, it's inflation hedge, right? There's no inflation. There's nothing to hedge. So I guess the other way would be like currency devaluation. Sure. I would just look at it as a commodity. Okay? Just look at a commodity. I think there's more sellers of gold than buyers of gold, but whatever. Gold is just money. It's just another form of money. Okay? So don't look at it as your typical safe haven and stuff. But when you think of XAU USD, what do you notice about it? Is it gold? It's a specific type of gold. It's gold price in dollars. So if the dollar is weak today, remember that one? That was great. If the dollar is weak, by definition, this gold will go up. But gold priced in euro wouldn't necessarily do that. So just XAU USD, by setting it up this way, USD, it is anti-dollar. If dollar goes down, this goes up. That's all, because it's anti-dollar, numerator, denominator. So, right. But if I were me, I wouldn't look at gold as like inflation hedge and all that kind of stuff. If it's going to be, yes, pro trader, gold is international money. I agree with that. If gold goes up and dollar goes up, that would be a safe haven play. Okay. And you'll say, well, that's not supposed to happen. Well, neither actually is safe haven play, right? It's not supposed to happen. When the world goes into emergency mode, it's not supposed to happen. Something unsupposed to is happening. And that's so you will find, even though gold is supposed to be the anti-dollar, dollar and gold will be strong for the same reason. But that's not a good sign. That's definitely not just like bad global macroeconomics, but and not a recession type global macroeconomics, but like something's broken. And we've been through that. Sanjay says, we enter trade crossover or pivot for entry. Pivots are just support and resistance of the market. It's not an entry. No, Lim, unfortunately not. Yes, it is, Mr. High Volt. It goes, what's it? It's a video archive. So if you become a member today, you'll have like 14 weeks, I think, of every webinar I've done with this current group. Yeah, me too, Robin. Me too. Robin and stealing. Drinking and Robin and stealing. Yeah. So anyways, so that's that. Let's anything else? So I burned through a lot of currencies really quick today. By the way, let me ask you something. Do you prefer that methodology to start out where I just crush a bunch of currency pairs? I didn't even look at the chat. I just go. Because typically when I'm doing my own analysis, like I look at a chart for about 2 seconds, right? Like I look at it like, nope. Look at the next one. Nope. Look at the next one. Maybe. Yeah. So typically I don't analyze something for 45 minutes. So I don't know if that's too fast for you guys, though. I don't know. Mahir says, what are you considering when gauging how long or how far price will go? Those are pivot points. Those are leading indicators. So Mahir, you need to learn pivot points. Oh, you guys did prefer it. All right. Barry's no. Can't double vote, Barry. Come on. Oh, Thaco did, so okay, it washed out. All right, cool. So I guess that's what you would prefer. Okay, cool. There's Marina. Yeah. Okay. Cool. All right, I'll do that. I'll do that from now on. And is there anything else I want to talk about today? Kiwi? You're all right. Kiwi. Well, I was going to do it, but since Moreno said yes, I'll do that from now on. All right. Beep, 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 beep. Ah, Justin, the politician. Well played, Justin. Well played, yeah. I'll vote for Justin. All right, Kiwi dollar, same place, still going on. I'm basically break even, but now I got a double top. Still short at 71. So I don't know, it seems all right to me, right? So I'm short here, and now I got a double top. I'm at break even. So I'm going to feel better about myself if it makes a lower low, lower high. Or lower low, lower high, lower low. And that's that. And I don't really want to add to this until I know I'm right. And I don't know if I'm right. Hey, Brina. Yeah, Moreno, one of the major reasons I want to go to Cape Town is so that you and I can hang out. Sell some pound together. Or buy it. Well, it depends on the day. So, see, this is the stuff I do, either mentally or actually physically do all this kind of stuff. So I'm looking at this and like, if it were going to go up, it would go up here, wouldn't it? Yeah, just new order, Prince. So like, if you recall, or maybe it was just a swing trading group. So I got the swing trading group back. I don't think it was the third week of August. I think we got back together the second week of August. So let's say around August 15th. Okay. And I said to the group, all right, we came back for a reason at this point. And I said, I understand for the last 8 to 10 weeks, there hasn't been a long-term swing, that we've been shooting at rabbits. Like if you were lucky to get a weekly swing. So we were almost like just day traders. But I took the summer off to live at Harvard and take classes and all that kind of stuff. Okay. So we come back on August 15th. And I said, in the next 2 weeks, but I'll even, it's actually tighter than that because everybody knows that the third week, right? The third week of August is when we're supposed to start building our portfolio. So anyway, so I get everyone back and I'm like, hey guys, things have been slow for 8 to 10 weeks. I get that, but it's normal. And people that bitch and whine and complain about the markets having no volume and no volatility, they're the ones that are going to bitch and complain that there's too much volatility in a few weeks. So we need to look at all yen pairs and prepare to buy them all. And I challenge you, and I said this to the group. I said, I understand there's no buying opportunities today, but by Thanksgiving, which was last week, I challenge you to have 20 open trades going into Thanksgiving. And that, in the period between the third week of December, or November, which actually this year was the fourth week, just because of the way the holiday fell. So between the fourth week of November and the second week of December, you will dump all 20 trades for profit. Okay? That's neat, right? So you would add a trade. Every day, there's a day trade. Every week, there's a week trade. Every month, there's a month trade. And you take them all individually, all independently, doing your job each time, right? Buying at support, buying dips, all that kind of stuff. Buying dips at support. It's not overly complicated. But what you do is you manage the risk by adding a stop and then moving your stop to break even, and then just walk away. I don't trade USD yen. Just because I know what you're asking, you're like, wouldn't they both be bullish? Wouldn't they both be bearish? Yeah, and that's why I don't trade it. Okay. So that's how you do it. You would stack where let's say you were doing a day trade now. Okay. So we're on Kiwi, pound Kiwi, right? But if I was day trading, okay, I'd look at it this way and I'd be making decisions this way. Okay. So you tell me what would Wayne do yesterday if Wayne was a bull? These are day trades on a 15-minute chart. You tell me, you should know. It's so basic. What I do is so simple that you should know what I'm going to do before I do it, because I teach you how I plan my trades. So if I was a bull on pound Kiwi, I know it, you know it, I've been a bull for 12 weeks. What would I do yesterday? What's the basis of my day trading strategy, if you want to call it that? What would I do? You should know this. This like, open the book, chapter 1. Buy at M2. Yeah, thank you. So this is my buy zone, guys. Between the central pivot and M2. I buy it. Look, I bought it. Now, over the course of the day, so now we're talking about what if I'm going to hold these trades for 10 weeks? Okay, I want to make sure you're following me. How do I stack trades so that 20 weeks later I have 20 or 30 or 10, you never know, trades open? Well, look, I bought it here. It went profitable here, moved my stop to break even, and I'm done. Now, what about today? What would Wayne do? Oh, same thing, right in here. So buy it, right? It makes a higher high, move the stop to break even, and I'm done. But now I have 2 trades open. And I do this for 6 weeks. Yeah, sure, sometimes it's going to come down, but if I get the trend right, this might get knocked out of break even, but this one would live. And over the course of 6 weeks, I'd probably get 10 trades to live. But 10 trades with 300 pips each. Cool, nice. Okay? That's the idea. And sometimes you are blessed with amazing market conditions where almost all your trades stick. It's beautiful. You just can't believe it. You're like, oh my God. Right? Oh my God. 12 days in a row and you got 12 winners in a row, all still open. You're like, dang. But it's not you. You're just doing your job. What size trades do you deploy? The smallest ones possible, Max. Okay? And I answered that yesterday as well, but let's cover it briefly. Okay? Let's say, Max, you had 20 losing trades in a row. What are the odds that you can have 20 losing trades in a row? Pro Trader says it's rare occasion. No, it's not. I disagree with that. It's not every day, but I wouldn't call it rare. It's great when it happens. It's not uncommon, but rare. Oh, it's definitely not rare. It's not abnormal either, right? So, anyways, what's the chance that you have 20 losing trades in a row? It should be 0%. Okay. Then what are the chances you have 10 losing trades in a row? What's your risk of ruin? What are the likely? And you're like, yeah, that could happen. But 20 unlikely. So let's play with the 10. This could happen. You have a horrific week or month or whatever. But at some point, if you have 10 losing trades in a row, you should walk. Okay? But let's talk about this. As a percentage of your account loss, what is the worst percentage you're willing to have in your trade history? Because remember, you have to carry your trade history for 5 years. So it's basically 2020 now, right? What's the worst month you want to have on your trading record in 2025 when you're showing this to your billionaire that wants to invest? What's the worst month you want recorded on your 5-year track record? 5%? No, a negative 1% pro trader. No, that's all right. You have to have losing months. You shouldn't. I'm not telling you to be afraid of losses. I'm telling you to be afraid of leverage. What? Yeah, but what is that number? What's the maximum drawdown? I call it a pain to gain ratio, actually. Your average winning month versus your average losing month, and how much volatility in between. Okay, so in live trading business, that's, again, if you show a professional investor that you've never had a losing month, they're going to be very concerned about that, because what you're telling them is you might not know how to take a losing trade. You're not telling them you're a good trader. People, like, sophisticated investors need a benchmark to identify risk. So if you say there's no risk to this, they're going to call bullshit right off the bat. In fact, that might just be the end of the conversation. You'll say, no, let me explain. They're like, we're not interested, thank you. So you have to have a legitimate, measurable level of risk, because it shows you how you manage risk in your portfolio. Okay? So like, when do you lose, and what conditions do you lose, and how bad is that, and how long does it take you to get back to break even, and meaning, like, if you lose 5%, does, in a month, how quickly do you make it back without taking more risk? Because this is all about risk-adjusted performance. And remember, you're trying to your Forex business needs to be put into someone else's more complicated portfolio of investments. So they need to know how much risk you take and how much return they should expect and all this kind of stuff. So anyways, going all back to this, you have to say, in your worst month, where for some reason, every time you pull the trigger, you lose money, what percentage is that? And that's for you as a manager to decide. So if let me give you an example. If you lose 20%, you're out of business forever. You're out. Okay? So you don't want 20% to be the number. 10%, that's bad, dude. Talk to a billionaire and explain, but sir, it's only $100 million. It was just a bad month, bro. What are you getting all upset? Like, it's only 100 M. Gee whiz. Why all this crying, dude? Okay, so yeah, it adds up. 10% is a lot of money. It's not a lot of money when you don't have any money. It's a lot of money when you got money. Because they wanted you to make them 10%, not lose 10%. So now you're on the cusp of being fired. So somewhere I would say 5% to 10%. Okay? Now, guess what? Most investors are looking for that in a year. So I want you to, again, put this in context. You lose 5% a month, and they're like, oh my God, I just wanted you to make 5% this year. And you lost it in a month? Now, usually you don't have clients like that, but clients are stupid, right? I've had clients lie to me. You're like, what? Oh, I'm super rich. No, I'm not super rich. No, I am. F you, dude. So anyways, let's look at it this way and say, if you want your worst month to be -8, and you had the worst month that you can imagine, let's say 12 losing trades, that should add up to 8%, -8. But this should be nearly impossible. If you lose that much, you're not a good trader. Okay? Cash, Cash says, why is my leverage so low? Well, I'm trying to explain that. Also, Cash, you have to understand, I'm also saying build a portfolio of 20 trades. Okay? So let's draw this differently. I'm now saying, so Cash is like, why not just dump a full lot on this? Why go 0.1 when you can just do the full? Right? Well, because I'm taking my full risk. So instead, I'd rather sell one here. Okay, let's say. move my stop to break even, right? Sell one here, move my stop to break even. Sell one here, move my stop to break even. Sell one here, move my stop to break even. And as I'm proven correct, I'm building up the portfolio. Okay? Because remember, I'm more worried about the -8 than making +8. In fact, I'm not even trying to make +8. Hey, if I got +3, +4, +5, I'm tickled pink. Once in a while I'll get +8, +10, but I'm not trying to. I'm more worried about, oh my God, what if I'm wrong on this pound yen, right, Marina? What if I'm wrong in this pound yen? Do I want to lose 1% of my account on that one bad idea? No, I do not. Okay? No, I do not. Thank you very much. I am not willing to risk 1% of the entire account on one trading idea? No way, Jose. Never in a million years would I gamble like that. That is way ridiculously over leveraged. Okay? So if it's good, I'll take a 0.1. And then if I'm proven right, I'll take another 0.1. And if I'm proven right again, I'll take another 0.1. But the thing is, because I'm not, let's say, only day trading this, because I back this up with a long-term trend, I'm planning on taking 100 trades, and maybe of 100, 40 of them will stick. Okay? And let's say 40 are BE and, right? Actually be more than, well, and then 20 are losses, right? But my losses are small. And now I got 40 that are winners, but all these winners are big. Okay? And they're going, like I just showed you guys, like put all this into context. I showed you before it happened to get ready, all yen pairs are going to go long. And that I'm challenging you. You should try to build portfolios of holding 20, but you do it one at a time, one at a time, one at a time. And those things go up for 9 weeks in a row. Think of that. Like, that's what I'm trying to get you at, where you're preparing for and analyzing market conditions and trends, and you're in it for weeks and weeks and weeks so that you can get a portfolio of 40 big winners, right? And these lots of break evens, but you don't have to worry about that. And some losers, it happens. But at the end of like an 8-week process, you have 40 winners that are significantly bigger than your losers. So here you're losing 50 and all of these are averaging 200. So you're up 8,000 pips profit, right? And you know, even though that's difficult to do and you have to be pretty good with your analysis and patience and discipline and all that kind of stuff, it's hard work for sure. But it's better than you trying to make 25 to 50 pips a day doing bullshit short-term scalps, right? Because we know most people can't do that. Okay? This will never add up to 8,000 pips like a proper trading plan would. And that's where I'm trying to get you. Now, the interesting thing is if you do get pretty good at this, I don't think you'll make big money. And the worst case scenario is you decide to increase your leverage so you do make big money. That's the end of your trading career. But if you get pretty good at the short-term trades, you're never going to miss this. You're never going to miss this. You're never going to miss this. These are all buys. If you're already a bull, you would never miss those. Those are so basic that all of a sudden, boom, look at this. This week you've made 3 trades. You're up 100 pips per trade. Or this one's up 300. This one's up 200. This one's up 100. And you're like, oh, all right, cool. 600 pips this week. Whoop, whoop. Okay? And you'll never get that just sort of small trades on small charts, 15, 20 pips each. Does that make sense? Oh, thank you, Prince Philip. So anyways, I hope you guys take that to heart. It's an important aspect. It's an important sort of hurdle you need to get through psychologically. So I'm not poo-pooing on small trades. I'm poo-pooing on only small trades. You will never make big money. You will never drive a yellow Lamborghini. If that's what you're here for, you'll never obtain it. So if you do want that, I can teach you. I don't think it's the right goal, but dude, what does a Gallardo cost anyways? $2,000 a month? It's nothing. Go get yourself that and be happy. But the funny thing is you go get it and you won't be happy. So anyways, easy peasy lemon squeezy. So let's take a look at this. So I'm trying to stop and reverse this market. Yeah, pro traders says scalping is not worth your time anymore. And that's almost my feeling too. I have scalped my fair share. Years. I've made thousands of scalps. But there was a time when I scalped a lot where I was taking, an embarrassing scalp would be 25 pips. More likely I was going for 100 pips. And I used to do this in FX Bootcamp webinars. You could probably find them where I was teaching people how to scalp 100 pips. But the thing is, it would take an hour or two. It wouldn't take a week. But because the market's more mature and there are more market participants, you just don't get 100 pip scalps anymore. The market just doesn't behave that way. So I think a lot what you see on YouTube, this get rich quick nonsense, it's left over from the days of when you maybe could scalp 100 pips or something. But what you'll see is they're only making 22 pips, but they got 2 standard lots on it. And I'm like, dude, that's retarded. So it's very much a disservice. Now, Jimbo says happiness is not sustainable. The key to happiness, in my opinion, Jimbo, is gratitude. So you can work, or at least, how about this? I constantly try to work on gratitude. And if you work on gratitude, you can very quickly become happy. But gratitude is a skill that needs to be practiced, at least for me. So if I can take a moment, right? Like, for example, this wealth manager I was having dinner with last night, he's got like $300 million. And so he's like, I was explaining I'm in grad school, I'm redesigning a Goldman Sachs strategy, I'm redesigning their entire retail division. And so we're talking about that, and he's like, what's your day like? Why is that ringing? Anyways, he's like, so what's your day like? And I said, well, I woke up, I did a few hours of reading, and then I went outside, and I realized it was a warm, beautiful day. The lake was just sparkling with golden light, and the sun was warm, and the air was just slightly cool, but it was warm on your face. I said, I sat down, and I smoked a cigar. And I was just grateful to have a moment like this. And he looked at me because, of course, he is in the office working. And he's like, I need to come over to your house more. I'm like, yeah, you're welcome to anytime. But I said, bring the bourbon. You bring the booze. I have the cigars. But the truth and the point of the story is, I literally took time to be grateful. And I was. And very quickly, I see what you're saying, Jimbo. Very quickly was happy to say, like, what a What an amazing thing to be able to work at home, to do something that you love, to have an opportunity to go to Harvard, to have an opportunity to really challenge myself intellectually, not just Forex, but things like redesigning Goldman Sachs, right? Stuff like that. In my other class, we're doing all the finance for mergers and acquisitions and stuff like that. And I'm like, and I have this beautiful cigar. I live in a nice place, and my kids are growing up in safety and in comfort. Just, oh my God, gratefulness, right? Now it's interesting, right? It's interesting, getting the yellow Lamborghini, as Jimbo, I suppose, was pointing out, is not the thing that will make you happy, right? It just won't. You have to have gratitude, and you can find gratitude in many places besides a Gallardo. And by the way, a Gallardo is not a real Lamborghini. A California is not a real Ferrari, so don't even think about it. So anyways, so what's going on here? There's something going on. I'm talking about gratitude and bringing happiness in your life, and there's a fight in the chat. That's weird. But anyways, yes, tomorrow I'm at fxstreet.com. So check it out on the FX Street YouTube channel. Prince says gratitude gets more difficult as you get old. Well, like I said, it's something that you got to practice. But it is amazing. So I do have friends that are billionaires, and they have everything that they possibly want. Right? Like if you own 35 cars, having a 36th one, what's the marginal utility of a 36th car? Right? You're like, now I'm happy. It's just funny. It's just a funny thing. So you have to work on being happy, and it's a skill. But I don't think it's natural, right? I don't think it's natural. I don't think humans are naturally happy. I don't think it's built in our DNA. So it's something that you have to work on, and it's something that I do try to work on every single day. And a lot of my happiness is you. I'm very grateful for you being in my life. So thank you very much. And I will see you tomorrow at FX Street. Peace on earth. May the pips be with you. May our profits be above average. Please leave a comment on today's video. Please like today's video. And please subscribe to the Forex.Today YouTube channel. So once again, for the 164th month in a row, I'll do non-farm payrolls live at FX Street tomorrow. And then I'll be back here at Forex.Today on Monday. If you're in my swing trading group, we're going to meet in, 90 minutes? So I'll see you over there, and we're going to plan out the next week and the next month. I'll see you tomorrow.